So, last August, there's this guy who literally barely passed his college English classes, right? And he watches his company's stock surge by like 629% in a single day.
Yeah, that was a wild day for the market.
It really was. I mean, that one single day minted a $62 billion valuation. And the crazy part is, his product wasn't an app or a cryptocurrency or, some new social network.
Right, it was a mass-produced humanoid robot.
Exactly. A walking, talking humanoid robot that costs less than a used Honda Civic. So, welcome to the Deep Dive. I'm your host, and today we're looking at a fascinating stack of financial guides, tech teardowns, and recent press releases from mid-2026.
And I'm glad to be here to help unpack this because all these documents point to one massive shift.
Yeah, they really do. The humanoid robot industry has officially moved out of the R&D lab and onto the public stock exchanges. So our mission today is to cut through all the sci-fi hype you see on social media and give you a shortcut to understanding the actual business models.
Right, the real costs, the real-world capabilities.
Exactly, the stuff driving this whole robot IPO wave.
Because we are seeing a complete recalibration of the market right now. Today is really about separating the heavily funded pilot programs, which, let's be honest, are essentially just very expensive corporate science experiments.
Yeah, totally.
We have to separate those from the actual paid commercial deployments that are actively reshaping global labor.
Okay, let's unpack this, starting with that massive market shockwave I just mentioned at the top. Unitree Robotics. They went public in August 2026 on the Shanghai Star Market, and the financial world just lost its collective mind.
They absolutely did. So the initial offering was priced at 150.8 yuan per share, but by the end of day one, it hit 1,100 yuan per share.
Wait, really? 1,100?
Yeah, which pushed their market cap to nearly 445 billion yuan. That translates to roughly 62 billion US dollars.
That is insane.
It is. It proved that the public market has this almost insatiable appetite for pure-play humanoid robotics right now.
To really grasp how wild that is, you have to look at the founder, Wang Jingxing. Our sources paint him as this, massive underdog.
Oh, definitely.
He was totally unimpressive academically,
Yeah.
but he had this hyperfixation on machinery. Because back in 2015, the entire robotics industry was just obsessed with Boston Dynamics.
Right, the Atlas videos everyone was watching.
Yeah, and everyone was trying to copy their incredibly complex hydraulic systems. But Wang just flat out refused to go down that path.
Because he saw the writing on the wall. I mean, hydraulics are incredible for explosive power, jumping, backflips, all of that. But they are an absolute nightmare for commercial scaling.
Because of maintenance.
Maintenance, yeah, and they require hyper-precise manufacturing. Plus, they're incredibly expensive, and frankly, they leak fluid everywhere.
Right. Nobody wants a robot bleeding hydraulic fluid on their warehouse floor.
Exactly. So Wang stubbornly chose electric motor solutions instead. And it was a brutal journey for them. By 2018, Unitree was effectively out of cash.
Oh, wow.
Yeah, Wang actually stopped taking a salary and just drained his personal savings just to keep his engineers paid.
Well, that stubbornness is paying massive dividends now. Because here is the fact from the sources that just stopped me in my tracks. Unitree is profitable today.
Yeah, not a 10-year projection.
Right, not 2030. Today. In 2025, they shipped over 5,500 humanoid robots. That gave them a 32.4% global market share, generating around 1.7 billion yuan in revenue.
And the margins are the craziest part.
They're pulling off a massive 60% gross margin while selling their G1 robot overseas for around $13,500. So please make that make sense for me. How on earth do you get a 60% margin on a 13 grand robot?
What's fascinating here is that it isn't just a story about cheap labor or, cutting corners on materials. It's about a fiercely disciplined, actuator-centered design.
Actuator-centered.
Yeah. So before humanoids, Unitree spent years perfecting those robotic quadrupeds.
Yeah, the robot dogs.
Exactly, the robot dogs. When they moved to humanoids, they didn't start from scratch. They basically took the motors, the control systems, the encoders, and the motion control software from the dogs and reused them.
So it's like a highly efficient shared architecture.
Right. They snapped the dog parts together into a human shape, essentially.
Okay, but even then, industrial robotic arms are notoriously expensive. How did they solve the cost of the actual joints?
Well, they ditched the industry standard. Most high-end industrial robots use something called strain wave gearing.
Strain wave gearing.
Yeah, to put it simply, strain wave gears use these highly complex, flexible metal cups to achieve absolute zero wobble.
Okay.
They are incredibly precise, but they are brutally expensive to manufacture, so Unitree just bypassed them entirely. They use a quasi-direct drive or QDD motor setup with planetary transmissions.
Wait, planetary transmissions,
Yeah.
like planets in space.
Exactly like that. Think of smaller gears orbiting a central gear, just like planets orbiting the sun.
Oh, okay, I can picture that.
It's a much older, highly durable, and vastly cheaper mechanical concept. So by combining that with their in-house joint designs and tapping into China's massive component supply chain, they created an unbeatable cost structure.
You know, that feels incredibly familiar. It sounds exactly like the playbook we saw with consumer drones, like 10 years ago, or EVs more recently.
Flood the market first.
Exactly. You flood the market with cheap, reliable hardware first, and you figure out the software ecosystem later. Unitree is basically selling the physical body to universities and factories and just letting them write the intelligence on top of it.
That is the exact strategy. They are open sourcing the ecosystem.
Yeah.
They are effectively crowdsourcing the brain of the robot while they dominate the global hardware supply chain.
Okay, so Unitree is taking the open, volume-driven approach. But let's look at a company taking the complete opposite bet, Tesla's Optimus.
Right.
They seem to view the physical robot as almost a secondary priority.
Yeah, Tesla is taking the scale maximalist approach. They are building a massive closed ecosystem. For them, the robot is merely a vessel for their proprietary software.
Which is such a contrast to Unitree.
Totally. Unlike Unitree, Tesla's approach is internal deployment first. They are installing production lines in their Fremont factory and using the robots on their own floors to test them out. They aren't even targeting public sales until the end of 2027.
And their entire pitch revolves around this massive data flywheel, right? They're taking the visual intelligence from their full self-driving system, the FSD, in their cars, and training it using their massive Cortex supercomputer.
Exactly. The premise is continuous improvement. The robots learn from millions of hours of video data, feeding back into a closed loop to refine their generalized intelligence.
But let's pause and look at the physical reality versus the hype here. Because Tesla made a massive deal about their Gen 3 hand.
Oh yeah, the 22 degrees of freedom.
Right, it has 22 degrees of freedom, which, for you listening, just means the number of distinct ways the joints can move, and 50 actuators, aiming for unprecedented fine motor skills. But our sources point out that as of their Q2 2026 earnings call, the ground-up V3 robot design hasn't even been fully revealed yet.
No, it hasn't.
And then there is the elephant in the room, the cost. Elon Musk claims they will sell these for $20,000 to $25,000 once they hit a scale of 1 million units a year.
Yeah, well, the external estimates tell a very different story right now.
Oh?
Current teardowns and supply chain analyses put the actual build cost of an Optimus unit somewhere between $50,000 and $150,000 per unit today.
Wait, hold on. Unitree is shipping thousands of actual robots for $13,500 today.
Right.
And Tesla is selling the promise of a $20,000 robot that currently costs up to $150,000 to build.
That's the reality of their current R&D phase.
And they won't even sell it to the public for over a year. Why is the market rewarding Tesla for this? Aren't they just burning billions to build a gold mine, while Unitree is quietly making a fortune selling the shovels?
It really comes down to how financial markets price potential. Tesla's valuation embeds the option of a future where they control a million-strong robotic workforce.
Oh, I see.
Musk has explicitly stated Optimus will represent 80% of Tesla's future value. Yes, it requires massive upfront capital to vertically integrate, designing their own AI inference chips, their own actuators, their own software.
They're doing everything in-house.
Right. But if they crack the code on general robot intelligence within a closed system, the ceiling isn't just high, it's limitless. They won't just be selling a machine, they will be selling generalized labor as a subscription.
So Tesla wants to build one machine that can do everything, eventually. But what if the secret to making money in robotics today is actually building a robot that only does one thing really well?
And that brings us to Agility Robotics.
Exactly. They are a U.S. company ignoring the general-purpose dream entirely to focus on a massive immediate pain point, which is the supply chain.
Agility is a fascinating foil to Tesla. They are targeting the B2B logistics market, which is estimated to be a $1 trillion opportunity, and they're making aggressive financial moves to capture it.
Right. They're going public via a SPAC merger with Churchill Capital Core XI. They're targeting a $2.5 billion pre-money equity value, trading under the ticker AGLT.
Yep.
Their flagship robot is Digit V5, and the sources emphasize a very specific phrase about Digit. They call it the world's first AI-enabled, cooperatively safe humanoid.
That distinction is everything. Historically, if you put a heavy industrial robotic arm in a factory, you have to build a literal metal cage around it.
Because it's dangerous.
Exactly. If a human walks into its path, the robot doesn't know to stop, and people get severely injured or killed. But a cooperatively safe humanoid is designed with the sensors, the software, and the physical limitations to work alongside humans in unsegregated, dynamic environments.
Here's where it gets really interesting for you listening. Agility isn't building a robot to fold your laundry, and they definitely aren't programming it to do parkour for a viral
Oh,
video.
no, not at all.
They're building a forklift with legs, and they have serious commercial traction.
They have over $300 million in contracted multi-year orders, and they have logged over 65,000 hours of operation across 9 customer facilities.
Who are the customers?
We're talking logistics giants like GXO, Amazon, Schaeffler, and Toyota.
Wow. They also built a massive facility in Oregon called RoboFab, which is capable of pumping out 10,000 units annually, and they are sourcing 75% of their parts domestically here in the U.S.
Right. If you are an enterprise investor looking at this space, Agility provides the metrics you actually care about. They aren't running pilot programs where the robotics company essentially begs a factory to let them test a prototype.
Right, it's not a trial run.
No, these are paid commercial deployments. And most importantly, Agility is proving their mean time between failures, or MTBF.
Let's define that, because MTBF sounds like dry engineering jargon, but it's actually the holy grail for a warehouse manager, right?
Absolutely. Mean time between failures is exactly what it sounds like. It's the average time a machine operates before it breaks down.
Makes sense.
In a logistics warehouse, downtime destroys profit. It doesn't matter if your robot is cheap or incredibly smart. If it breaks down every 48 hours and stops the production line, it is a liability, not an asset.
Right.
Agility is proving that the robots can run reliably for extended periods, showing that enterprise adoption is hitting a meaningful inflection point right now.
Okay, so we've covered the hardware disruptor, the software visionary, and the practical B2B player. But there's a massive legacy pioneer in this space whose current strategy reads like a corporate thriller. Boston Dynamics.
Boston Dynamics is the name everyone knows. They recently retired their hydraulic Atlas robot, the one you've watched doing backflips on YouTube for the last decade, and introduced a sleek, all-electric version of Atlas.
And since they are now owned by Hyundai Motor Group, their valuation is experiencing what financial analysts are calling the Atlas effect.
Yeah, the numbers are huge.
Analysts at KB Securities project a market value of 128 trillion won, while Hanwha estimates it could hit 146 trillion won if they go public.
And there is a massive macroeconomic reality driving these numbers. Our sources highlight a terrifying demographic cliff coming up.
Right.
Over the next decade, we are looking at a projected decline of over 100 million working-age people across OECD countries and China.
100 million workers just disappearing from the labor pool. That's staggering.
Because of that, global demand forecasts predict we will need 9.6 million humanoid units by 2035 just to plug the gap. Atlas alone is projected to capture 1.5 million of those units.
So if we connect this to the bigger picture, there is a corporate maneuver happening behind the scenes at Hyundai that is arguably just as fascinating as the demographic data. Hyundai Motor Group has an incredibly convoluted ownership structure known as circular shareholding.
It's very complex.
Give me an analogy for that. How does circular shareholding actually work?
Imagine 3 people standing in a circle, and they are all holding each other's wallets.
Okay.
Nobody can be robbed by an outsider, which protects the group, but it also means the guy ostensibly in charge can't even buy a cup of coffee without getting permission from the others.
Oh, wow.
In Hyundai's case, Hyundai Mobis owns part of Hyundai Motor, which owns part of Kia, which loops back around and owns part of Hyundai Mobis. The chairman, Chung Wee-sun, only holds a tiny direct stake in the central company.
That sounds like an administrative nightmare.
It is. Industry analysts heavily suspect that an IPO of Boston Dynamics isn't just about funding robot research. It could generate the massive capital needed for the chairman to buy the necessary shares to unwind those wallets.
To break this circle.
Exactly. To vertically integrate the affiliates and solidify his direct control over one of the biggest automotive empires in the world.
That is wild. They are using advanced humanoid robotics as a financial crowbar to restructure a global conglomerate. And they have a massive advantage over startups, which is a captive deployment environment.
Yes, they do.
Hyundai can test the electric Atlas in their own automotive factories throughout 2025 and 2026. They can work out every single bug internally before they ever have to convince an external customer to buy one.
It provides a safety net that companies like Unitree simply do not have.
Speaking of safety nets, I think we need a reality check. We've been throwing around billion-dollar valuations and massive unit projections, but the sources highlight some incredibly severe vulnerabilities threatening this entire industry.
Right. The headlines focus on the revenue, but the underlying fundamentals show some brutal headwinds. Let's look at Unitree again.
Yeah, they had a massive IPO, and they are technically profitable.
Yeah.
But you read the fine print of their Q1 2026 earnings, and their profit actually plummeted by 52.6%, dropping to 40.3 million yuan.
Yeah.
If they're selling so many robots, why is their profit shrinking by half?
Well, they are trapped in a vicious cycle. To maintain their volume, they are engaging in a brutal price war, actively compressing their own margins. At the same time, they are forced to drastically increase their R&D spending just to ensure their hardware can keep up with the AI advancements coming from companies like Tesla.
So they're getting squeezed on both ends.
Exactly. It is a race to the bottom on price and a race to the top on capability.
Beyond the financials, we have to look impartially at the geopolitics. And we're not taking sides here, just reporting the facts from our documents, but our sources note that over 40% of Unitree's revenue is generated overseas,
Right.
with the U.S. market accounting for roughly 13 to 19% of that. But in mid-2026, the U.S. Federal Communications Commission added foreign-produced advanced robots to its covered list. Additionally, Unitree was specifically added to the Department of Defense's Section 1260H list.
Now, Unitree has publicly stated that their existing models, like the G1 and the G2, already possess FCC certification, so there isn't an outright immediate ban on what's currently shipping. But for investors, this creates massive regulatory uncertainty. Any future models or software updates face a very murky path to entering the U.S. market.
And then there's the technical side of that risk, which is cybersecurity. We're used to thinking of robots as heavy machinery, but humanoids are highly networked. Mobile computers covered in high-definition cameras and spatial sensors.
They see everything.
Yeah. The sources document a very specific vulnerability, CVE 2025-2894. This revealed an undocumented remote access function in Unitree's G1 firmware, alongside command injection weaknesses.
A command injection weakness is a critical flaw. It essentially means that if the robot system expects a routine instruction like walk forward, a malicious actor can slip in extra code.
Like what?
They can tell the robot walk forward and tell a live feed of all camera data to this external server.
Wow. Which means if an attacker gets hold of the API key, they could theoretically take remote control of a 100-pound machine walking around a proprietary factory floor. If you wouldn't buy a self-driving car without knowing exactly who controls the network, why would a manufacturing plant buy a walking camera with known firmware vulnerabilities?
This raises an important question for the entire sector. The ultimate winner of the humanoid race won't just be the company that builds the cheapest hardware or even the company with the most advanced AI.
No.
It will be the company that can seamlessly navigate international trade compliance, guarantee enterprise-grade cybersecurity, and prove a genuine return on investment after a client pays all the integration and IT security costs.
So what does this all mean for you listening? We are watching a multi-billion-dollar strategic war play out in real time. We've got Unitree flooding the zone with affordable hardware, betting that open-source intelligence will follow.
Yep.
We've got Tesla building a massive closed loop of visual data and supercomputers, aiming to monopolize generalized labor. We have Agility focusing entirely on the immediate, unglamorous needs of the logistics supply chain. And we have legacy giants like Boston Dynamics, using the technology to literally reshape global corporate empires.
The overarching theme of our sources is maturity. This industry is finally transitioning from viral marketing stunts to audited financial statements and hard ROI.
So the next time you see a video of a robot doing parkour on your feed, I want you to look past the acrobatics. Look at the factory floor behind it and ask, who is paying for this? What is the actual business model here? Is this machine generating profit, or is it just burning through venture capital to get likes?
Because the engineering required to do a backflip is incredible, but the engineering required to build a profitable business is infinitely harder.
It really is. We started out trying to cut through the sci-fi hype and look at the muddy reality of supply chains and software margins. But I want to leave you with one final thought that builds on everything we've explored today. The sources made it clear that while these companies are currently fighting over factories and warehouses, the medium to long-term goal for almost all of them is household deployment.
Right. Getting a robot into the home is the ultimate endgame.
Exactly.
Yeah.
So picture this. Fast forward a few years. When these cooperatively safe, incredibly advanced, camera-equipped humanoids finally step out of the logistics warehouses and walk into our living rooms. When they're navigating around our furniture to fold our laundry and cook our meals, who actually owns the physical data they map of our private spaces?
That's a huge question.
Does the map of your home belong to the hardware manufacturer? Does it belong to the AI provider parsing the data? Or does it belong to you?
In an industry driven by data flywheels, that might be the most valuable question of all.
Definitely something to ponder the next time you see a robot walking down the street.
Ah.
Thanks for joining us on this deep dive into the humanoid robotics economy. We'll catch you next time.